Okay, good evening, everyone. Hope you can hear me clearly. So thank you for joining us today. Oh, sorry, I see some participants coming in, so maybe we'll just give it a minute or two before we start. Hi everyone, thanks for joining this evening's session. Let's give it one more minute for those who are still joining. So I do see that the participants are coming in, so just give us 1 minute or two. All right, thank you. Okay, good evening, everyone. The time now is 8:01 p.m., so we want to start now, so as not to shortchange those who are already signed in to this webinar session. So thank you all for joining us tonight. I think tonight this is organized by Phillip, and we are very happy to have be part of this Society General. So a very quick introduction of myself. I am Marcus from Society General. We are the issuer of these daily leverage certificates that's listed on SGX market. All right, so we are here today. I'm here today to give you a bit of an introduction on the DLCs, how to use it, how does it work. But more importantly, I think definitely is to hear from people who actually trade the DLCs themselves. So we also have invited, Robin, who is award-winning TR, trading representative at Phillip Securities, to also share with you how does he use the DLCs to profit from a bear market. All right, so in this very short 1 hour session, I hope to give you guys a quick introduction on how the DLCs work from a sort of like an educational standpoint for the first 15 minutes. And then with the remaining time will be used for Robin to share his insights on the market, his outlook on the market, as well as how does he use the DLCs, the daily leverage certificates, to profit in a bear market. All right, so without further ado, let me just jump straight into my slides. Promise you it will only take 15 minutes. After that, all the time is for Robin. All right. Okay, so Robin, I need you to unshare your screen first before I can share.
Okay, one sec. Okay, got it.
Okay. All right. Okay, so this is, as I mentioned, the DLCs. For those who are new to the DLCs, it stands for Daily Leverage Certificates. All right, it is a short-term trading instrument that is listed on SGX that offers you exposure to both local market as well as the regional, Hong Kong stocks and even the US indices now, right? So this is listed on SGX securities market, where Society General, we are the product issuer. We list it on SGX for investors to buy and sell these DLCs, all right? Okay, so these DLCs, daily leverage certificates, I think the common number one misconception is that, you can only trade it daily, all right? Because the name of it is called daily, all right? But it is a short-term trading instrument, definitely, but doesn't mean that you can only trade it intraday or only for one day, all right? You can trade it for a few days, you can trade intraday or a few days, or even like a few weeks, but definitely we do not advise investors to buy and hold these DLCs for months at end, all right? This is a short-term trading instrument, a few days, intraday, or even a few weeks, but definitely not for months at end. Okay, remember that this is a short-term trading instrument. All right, and then the second part of the name, leverage. This is a leverage instrument. So be careful, exercise your risk management and your position sizing as well, because you are using leverage when you buy and sell these DLCs. Okay. So these DLCs are for SIP qualified investors only as well. So do check with your broker if you are SIP qualified. Okay, these DLCs over here, the DLCs are a fixed daily leverage instrument. So if you have ever traded a leverage and inverse ETF before, like your US TQQQ or SQQQ, for example, that payoff is exactly the same, just that this is in a different structure. Okay, and also for DLCs, there are two types of DLCs. One is a long DLC and a short DLC. Okay, so if you are bullish on the underlying, stock, say a DLC on a DBS, for example, if you are bullish on DBS, for example, you would buy the long DLC. All right. If you are bearish on DBS, for example, and then you will look at the short DLC in order to profit from your view of the market. Okay, so be careful. Do not go and short sell into the market. Do not go and short sell the long DLC or short sell the short DLC. Whatever it is, you are either buying a long DLC or you are buying a short DLC, depending on your view of the market. Okay. And this is a leverage instrument. So there's a few leverage factors. There is a 2 times, 5 times, or 7 times for you to choose from for both long and short directions. So you can, choose whichever leverage that you want. For single stocks, however, is all at 5 times leverage, 5 times long and short for the single stock underlying DLCs. Whereas for indices, there is 2 times and 7 times as well. So do consider what your risk threshold and your risk appetite before you decide what leverage factor you're going for. And like I mentioned, these DLCs are all linked to an underlying. So it's either a DLC on an index like the Hang Seng Index or the Nasdaq Index, or a DLC on a single stock, which is like your DBS or your Tencent or your Alibaba. Okay, so the DLCs give you long and short exposure with a fixed daily leverage of 2 times, 5 times, or 7 times on the underlying asset. Okay, and they are listed and traded on SGX securities market. So you can access it through your POEMS account. You log into your POEMS account, you search for the stock code of the DLCs, which I'll show you shortly. You'll be able to retrieve that DLCs, and then you can buy or sell it, just like, how you trade a stock. Okay, so, and this is issued instrument. So it's issued by Society General, and we are also the designated market maker of all the DLCs that we've issued. So we're obligated by the exchange to provide liquidity on all the DLCs throughout the trading day, 9 a.m. to 5 p.m., excluding a lunch break, so that investors can buy and sell the DLCs, all right? But for the Hong Kong underlying DLCs, like the Tencent DLCs or Alibaba DLCs, take note that, we will only provide liquidity when the Hong Kong market is open, and the Hong Kong market is only open from 9:30 a.m. to 4 p.m., okay? So we have a wide range of DLCs that are available for you to choose from. As of today, we have about 285 DLCs listed on SGX market, spanning across, the underlyings include Hong Kong indices and single stocks, your large cap names, your Tencent, Alibaba, even for the old economy stocks like, Petrol China or, CNOC, we do have the DLCs on them. And Singapore indices as well, we have SIMSKI, MSCI Singapore, we have also the STI DLCs, and all the the STI constituent stocks, we should have it. The DBS, Singapore Banks, and as well as Singtel, Wilmar, CapitaLand, Sembcorp Industries as well. So there's a wide range of DLCs for you to choose from. We do offer the widest range of underlyings for the DLCs that you can choose from: Hong Kong indices and Singapore indices, and the single stocks as well. And with a new introduction, we just listed the US indices this year. So that is the US index DLCs on the S&P 500 index, the Nasdaq 100, and the Dow Jones indices. All right, so it's something new that we launched this year since March. We started to roll it out, starting with 5 times leverage, long and short, and then followed by expansion to 7 times leverage. All right, so this is quite exciting. We also did the STI this year as well. So we did quite a bunch of new underlyings this year, and it's quite exciting, especially given how volatile the markets have been. It's been quite a timely launch that we've seen amazing growth on the outstanding positions and the adoption of these products, especially when these markets are quite volatile. All right, so this is just the 2 times, 5 times, and 7 times STI DLCs that we launched this year. So you can take a long or short position on the STI index, either with 2 times or 5 times or 7 times leverage. Okay, so this is really one of the very few instruments that you can use to go short on the STI index if you're bearish. Otherwise, most of the investors who are more the instruments listed are all like long only instruments. So this is sort of an opportunity for you to even maybe hedge your positions using the short DLC switch. I will just eat that bit on later on as well. Okay, and then we have the US indices DLCs as well. So this is the Nasdaq, S&P, and Dow Jones indices DLCs with 5 times and 7 times leverage for you to choose from. Okay. So take note, right? The US indices DLCs can only be traded during SGX market hours, during 9 a.m. to 5 p.m. But that's when the US markets are closed, right? So when US markets are closed during SGX market hours, we will provide quotes on the long and short US indices DLCs that will be closely related to the E-mini futures that is traded 24 hours. All right. So just take note of that you can only transact it, buy and sell the US indices DLCs during SGX market hours. Okay. So the DLCs, for those who are very new to it, it is, as I mentioned just now, that it's a fixed leverage instrument. So it provides you with that 2 times, 5 times, or 7 times leverage on the daily performance of the underlying asset on a close-to-close basis. Okay, that's the basic principle of the DLCs and something that you should understand. Okay, so the leverage is on a close-to-close basis every day and it's fixed. Okay, so for example, on the STI DLC, right? On the STI index, in this example over here, on day 2, it is up by 2% from the previous day, by 60 points. So it went up by 60 points. That's 2% again from the previous day, and that 2% will translate into a 10% gain on the 5 times long STI DLC, while it translate into a 10% loss on the 5 times short STI DLC. All right. So this happens every day on a close-to-close basis, and it's repeated every day. Every day, it will give you that 5 times performance on the daily performance of the STI index for this case. All right. And you can also see, conversely, if STI was instead down by 2% today, then the 5 times short STI DLC would increase in value by 10%, while the 5 times long STI DLC will fall in value by 10%. Okay, so remember, this is very important for the DLCs. The fixed leverage is on a close-to-close basis every day. Okay, so this is our website, screenshot of our website, which I will show you in a very short while. You can use it to refer to for all the DLC terms and all the full list of DLCs, as well as a lot of nifty tools for you to be able to understand more about the DLCs as well. All right, so the DLCs are usually priced between 20 cents to $2 range. Okay, and they are a separate instrument from the underlying stock or index. So in this example over here, this CWHW is the STI 7 times long DLC. So CWHW is the stock code of the STI 7 times long DLC. If you type in CWHW into your Poems account, you will be able to retrieve these DLCs and you will buy and sell the DLCs as long as you're SIP qualified. All right. So you can see over here, the STI is up by 1.33% on this day, on 20th July. So this is just a snapshot of a midday. It's up by 1.33%, and you can see that the DLC is up by around 7 times that at 11.4%, up from its previous intrinsic close value. Okay, so that's where the 7 times performance is, and similarly, the short STI DLC is down by 7% as well, roughly around 7%. Okay, so I mentioned the DLCs can be used for day trading, swing trading, or hedging purposes, for holding periods of intraday for a few days or even a few weeks, but definitely not for months at end. So you can use it for day trading. This 7 times long STI DLC rose by 6.25% during the day, when STI rose by 0.81%. So that's where the 7 times performance in. 6% for an intraday gain, that's not too shabby. So sometimes it can be used for a day trading purposes, especially on the Hong Kong underlyings, which can be more volatile. All right. And for swing trading, if you want to hold a position for a few days or a few weeks, then swing trading will be your style. So in this case here, the STI long DLC did perform, did give you that performance as the STI was up by 1.3% during this sort of 1 month holding period. Okay, and hedging purposes as well, you can use the short DLCs for all the underlyings. So STI, Alibaba, Tencent, you can use the short DLCs to be able to hedge your sort of your buy and hold stock portfolio. Say you have like 100K worth of Tencent shares that you want to hold for forever, you want to hold it for very long term, but you see an impending sort of correction on the Tencent stock. So you can possibly use the short DLC to be able to hedge your positions to make the gains as the Tencent or the STI corrects, and be able to offset your long-term investment portfolio. So we've seen people use it as a hedging purposes as well, given that DLCs offer you the flexibility to go long, but with leverage, but also on the short direction as well. Okay, so I would like to bring you guys to my website, to our website, dlc.socgen.com. Okay, so this is our website. So very quick view of our website. This is our website, dlc.socgen.com. So you can come to this website to find out more information about the DLCs. We have you can see the full list of DLCs under the products search page. So we have 285 DLCs listed. So do check out all the DLCs. You can use the underline button to select, okay, I want to look at the STI DLCs. And then that's where you get the 5 times, 2 times, and 7 times STI DLCs. All right. And then you can see on the information over here, the intrinsic close value, which is what is the value of the DLC as of every day end. Okay, and then the next day, that 5 times or 7 times performance is based off this intrinsic close value for the previous day. Okay, so important to note. And also, if you are looking at, say, Alibaba DLC, for example, and you're not so sure, you're looking at long Alibaba DLC, for example, and all at 5 times leverage, you're not so sure which one to choose because these DLCs are all at different price ranges, but they still give you that 5 times performance on a close-to-close basis for all the long DLCs. We're not sure which one to choose, right? So, you do look up for the star indicator, which tells you which is the most sensitive Alibaba long DLC. So always look up for this star indicator to select which one is the most sensitive Alibaba DLCs, all right. Whether this is the right DLC for your target exposure if you're bullish on Alibaba. Okay, so do look out for the star indicator as well. Just a very quick one on how to use our website to search for your DLCs that you want to choose from. So a wide range of underlyings you can choose over here, and then you can choose the long and short directions as well. Okay, so it's under here, products, and over here, search. And under our education tab, you can find out more information about the DLCs. How do you, what are the costs and fees of the DLCs? What's the compounding effect? What's the airbag mechanism? You can read up more on this, on the DLCs features over here. And if you want something to view, you rather watch, you're more of a visual learner, do check out our videos as well. I recently just made one video on how to select the right DLC for your target exposure. So please support, do come and check out this video over here on how to select the right DLC for your target exposure. And lastly, I think under market section is something that gives you a bit of more tools, insights into the market, as in who is buying the long and short DLCs. This is the DLC fund flows itself. Then you can see over here, over the last 5 trading days, okay, what have people been buying? They've been buying the long DLCs, the Singtel long DLCs, and the venture long DLCs over the last 5 days. That's at the highest sort of fund flows. Whereas those that are, selling the long DLCs, probably taking profit on their positions, you can just invert it. That's over here. So there's some people are taking profit on their long positions, or maybe even cutting loss, for example. All right. And on the short DLCs, you can see who have been buying the short DLCs: OCBC, UOB, Meituan, over here as well. Okay, so that's quite interesting for you to view. And also, you can look at the DLC fund flow, the long short ratio. over here. And lastly, you can look at the fund flows as well, right? Or the underlying. Over here, you can identify, which are the top gainers, top losers. But also, which one has the top turnover change day on day. All right. So Yangzijiang today had a 56% jump in turnover versus the previous day, while CapitaLand, had a 50% jump in turnover as well. This will help you to maybe identify, opportunities or maybe trends. And then you can use the DLCs to go to express your view as well. Okay. So do check out our market step for some insights into the market, including the fund flows of the underlying stocks as well. Okay, do take your time to explore, and I hope you also take this, use this website to learn more about the DLCs under our education tab. And if you have any questions at all, any questions on the DLCs, there is a secret hotline over here. Not so secret, but there's a hotline, DLC hotline over here at 6226-2828, where you can reach out to any myself as well as my team. Will be on standby during SGX market hours to answer any calls that you have, any questions that you have, any feedback that you have on the DLCs as well. All right. So that's a very quick introduction on the DLCs and a quick tour of our website, dlc.socgen.com. So please do reach out to us if you have any questions at all. I'll be here till the end of the session. So do drop any questions that you have on the DLCs or etc. Any other questions that you have in the Q&A box in this Zoom webinar. Put your questions in there, and then I'll try to answer your questions, and as well as Robin and I will try to answer your questions at the end of this session as well. Okay. So if not, please do drop your questions in there, and also I would like to invite Robin to come on now and take on his to share with you guys his outlook for the market, the Hong Kong market, as well as the US market, and also how does he profit in a bear market using the DLCs. All right, over to you, Robin.
Thank you, Marcus. All right, just give me a minute when I try to share my screen. Okay, Marcus, okay, you got to unshare. Okay, let me read. Okay. Let's see how you got this. Screen. Can you guys see my screen? Marcus,
yes,
can you see my screen?
Can see.
Okay, great.
Yes, can see.
Yeah, thank you everyone for coming on to this seminar. I can see a lot of you here today, about like 76 people, all right, coming on, and or 74 people coming on, so it's quite a big crowd tonight. All right, so thank you for coming in tonight. I hope you will enjoy this evening with me and Marcus. So I will be like spending the next 30 minutes or so sharing with you my insight into where the market is heading. And I think for many of you who are trading the market, this, I hope, will be an insightful session for you, because I will be sharing with you not only my thoughts, all right, but my trade plans. Okay, so if you have never heard of trade plans, you will see a lot of trade plans today. And I hope that at the end of the session, you guys will go back believing, right, that you are in control of things. All right, so in the stock market, many times when we are invested and things don't go our way, many of us will go into a state of anxiety because we don't know where the market is heading. So everything is like unknown to us because we always believe that the market is random, and it's unpredictable. But so tonight, right, I want to show you that you can be in control of things, all right? And you don't have to leave things to chances. So what I'm going to show you tonight, right? I'm sure a lot of you will look at it and say, "Wow, you know, it's mind-boggling to be able to see that a trade plan can predict where prices are heading, where prices can bottom out and they can top out, and the kind of thing." All right. So I hope you will, stick with me, and let's go straight into the session. All right, so the usual disclaimers, tonight's session is only for educational purposes only. There is no inducement to trade. All right. Excuse me, let me just get a drink. Okay, so let's go to what is the hottest thing that is moving the market today. So we have seen a 10% rebound on particularly the Hong Kong market. Okay, and Hong Kong and the China market has been on a relentless downtrend. All right, so I've been trading the Hong Kong and China market for so long. I've never seen such a prolonged, relentless downtrend that is taking a lot of stocks. All right, Hong Kong, China, Hong Kong stocks down between very common 50 to 70%. So it's like in a what you call it, a waterfall meltdown, right? So it's not only a meltdown, but it's like a waterfall meltdown. Everything is collapsing. Okay, so and just last week, right, we had a reprieve, right? Like a long-awaited reprieve, a relief rally, all right? And it started off, all right, with some people posting on the website saying that the Chinese government is on the verge of relaxing the COVID suppression policy. All right, and so this is one of the Reuters report, all right, that say that the Chinese government is about to make substantial changes, all right, to the dynamic zero COVID policy, and the market just catches on that, and you could see that even today I'm getting a report on Wall Street Journal, all right, about China weighs gradual zero COVID exit. All right, but proceed with caution without a timeline. So things are underway. So what all these reports are saying is that although the Chinese government, right, is denying that they are, pivoting, all right, on the COVID zero policy, but they are taking bite-sized steps, right, to elevate the situation. Okay, and today I read a very interesting report, from Goldman's. This report about Goldman Sachs saying, right, if China were to lift or relax its COVID zero policy, China's stocks may rally 20%. So we're talking about 20% here rally. So every trader, investor is very excited because they don't want to miss out on this boat. All right, can you imagine, right? The minute China says, end of COVID suppression policy, the Chinese stock is going to rally 20%. So nobody wants to miss this boat. And therefore now, right, investors and traders are saying, okay, I don't know when they're going to lift this, but it's going to happen in the near future. And therefore people are positioning, all right, for this reopening of Chinese economy. All right, and one of that, signals or signs, okay, that I see is in today's report, right? that after 2 years of trouble, Macau is relaxing the travel policy. All right, and Macau is resuming the acceptance of smart travel visa application on 1st November, allowing mainland Chinese residents to apply for tourist visa via the pre-pandemic online system rather than the more cumbersome in-person process. All right, so this is one of the baby steps or bite-sized steps that the Chinese government is relaxing and is allowing internal travels, all right, within China. So a lot of people now are saying, well, this is a very positive steps, all right, and the next will be opening to international travel, all right. So that's why people are hopping into the bandwagon now. They don't want to miss the 20% rally. Okay, and in case everything goes wrong, somehow, right, by some coincidence, all right, the CSLA feng shui chart, right, is also pointing to an October low. So you see here, right, the CSLA feng shui chart this year has been like spot on, all right. It has been, pointing to a downtrend all the way, all right, from May, June period, all the way downtrend to bottom out in September. So the feng shui is also on ours, on the side of the market. Maybe the market got a hang of the feng shui, all right. So I don't know which one comes first, okay, whether, everybody now believes in feng shui and therefore, they are starting to ramp up the market. But, feng shui, sometimes it works, sometimes it doesn't. So I think if as investors and traders, all right, you cannot depend on the feng shui, all right? You cannot even depend on rumor of the market opening. But what you need to depend on is really on your price action and on your charts. Can you believe it, right, that just on that day when the market bottom, so you can see here, this is the HS tag chart, right? So the worst sector in the China Hong Kong stock market, or the worst performer, all right, in the China Hong Kong stock market has been the tech sector, all right, in the likes of Alibaba, in the likes of Meituan, Kuaishou, all right, and this kind of tech stocks, right? So they are the worst performers. So for me, right, I've always been monitoring the Hang Seng HSI Index ETF, all right, 3032 for signals of market bottoming. And the signal sort of came, all right, a couple of days ago. All right, you can see that the market hasn't rebounded yet. It's still on the downtrend. And I posted like early this week, all right, or sorry, last week, Friday, maybe, on my Facebook. And I said, hey, watch out. This is something that is catching my eye. Look at the price action. So if you guys, have been following me, I am a guy that reads a lot into price action because I always believe that price action, right, goes forward, all right? It's a forward looking indicator, and it tells you what is coming ahead. All right, so the price action here, you look at the volume here, right? So the volume here in this price action of the contracts traded for the ETF, the HS-Tech ETF, blew up, mind-boggling, one of the highest volume in 3 years. Can you believe that? Something is happening, and therefore, I put it on my I told all the people that follow me on my Telegram chat group, on my Facebook, and I said, hey, stand by for a 10 to 15% rebound, and this was exactly what we got. Right, we got a 10 to 15% rebound since I posted this. Right, so that is why at the start of this seminar, I'm telling you that leave nothing to chance. Watch all this price action movement. They tell you a lot of what is to come. All right. So today, right, I want to, in this very short session, I want to, just focus very much on the Hang Seng Index, because you can make a lot of money if you know where the index is heading. And particularly, you can make a lot of money, all right, through the long and short DLC. All right, so DLC is, you know, it's a great derivatives, all right, listed on SGX. The great derivative in the sense that you can do two-way, all right? So if you are bullish, all right, you can be buy the long DLC, Hang Seng long DLC. If you are bearish, you could be, you know, shorting, all right, buy the shorts, Hang Seng short DLC. So the last 3 days, the Hang Seng Index have gone up about 10%, okay? And, you know, if you buy the 7 times short DLC, okay, if it has gone up 7% times 7, you make 70% off, all right, the whatever DLC you're buying, all right, the 7 times long DLC, all right, you make 70%. Okay, so you need just to get the direction right, all right? And so that is my expertise, all right? In the last 25 years of trading, all right, I have spent my time trying to understand trends, you know, trying to predict market bottom, market tops, you know, and also market rebound. Okay, so what I want to share with you, right, is that you know, the first, whatever you do, all right, you know, the first thing you must have is a trade plan. All right, a plan that you know where the market is going. So in a plan, like every other plan that we have in life, you always have macro, you know, a bird's eye view of everything, and you have very, very micro. Okay, so the macro trade plan, right, isn't looking very good for Hang Seng. And I want to show you the macro trade plan. Hang Seng, look at this line here that I draw. All right, this is a multi-year trend line that stretches all the way to 1980s. Can you believe it? Stretching all the way 40 years back. And every time in history that Hang Seng touches this line, all right, you get a huge rally, all right, a rally that can make you a fortune. Right? Can you believe, right? Every time it touches this line, you can make a fortune. But this time around, it's not working, all right? It's not this, right? Look at that, it's actually broke that trend, right? And after it broke that trend, right, you know, it is rebounding, all right? So in a macro view, all right, of this trend, all right, how I interpret this trend is that it broke down from the macro trend, and as long as it is below the macro trend, you know, you don't want to be super bullish. Okay, so there could be a rebound, big one coming, but you know, you don't want to be super bullish. And the previous slide I've shown you that, you know, there could be a short-term market bottom looking at the price and volume action, but in the big picture, there is no uptrend yet. So we treat this as a rebound. And to me, macro, all right, one figure, 18,000. As long as the Hang Seng Index stays below 18,000, there is no way I would turn long-term bullish, all right? So short-term bullish, but not long-term bullish, all right? So that is my position now, all right? So now, so here, all right, I want to spend some time now, all right, showing you now from my chart. So I'm going to show you, I'm not sure whether I can do it, but I'm going to show you live, all right, how I can do, how I plot now and how I interpret the short-term trend of Hang Seng, okay? So you stay with me for a while. I need to be like switching charts, okay? All right, okay, let me see if I can get my charts up here. Okay, just bear with me for a while, all right? And I'm going to get the Hang Seng chart up. Okay, see if I can get the system up now and share with you. All right, so I think, you know, there is nothing more interesting than just showing you live on the chart how I interpret chart, all right, live. Okay, all right, let me get the Hang Seng chart out. Sorry, take a bit of time to load up the system. Okay, it's coming up. Okay, great. It's coming up. It's coming up now. All right, and I'm going to my Hang Seng chart. 1 minute. Okay, coming up, coming up. Let me find a Hang Seng chart. Okay, I got it here. Let me see. Okay, got it. Okay. Okay. Can all you guys see my chart, my Hang Seng chart? If you can, please just say yes on the chat.
Yes, we can see.
Okay, great. Okay. All right, exciting. All right, look at this chart. All right, I've seldom do live demonstration. So this is where I'm going to do some live demonstration, all right, to you. Okay. So we had we saw the macro view of Hang Seng. So what is the short-term, my short-term take of Hang Seng? So if you look at this, you know, Hang Seng, right, chart, right, where it peaks somewhere off this year, February, okay, and it was on a one-way traffic now. And it's so dangerous to be buying on the bounce because every bounce, you know, became lower and lower, and every bounce failed, and it has failed since February. All right. So what the trend is telling you is that if you are not careful, all right, it's going to be a little risky trading. Buying into rebounds, because rebounds has been disastrous in history. Okay, so but then, right, there are some rebounds, right? They are different from other rebounds. Okay, so if you say I'm an old dog in watching charts, right? So I've been watching charts for 30 years, minute to minute, hour to hour, day to day, week to week, year to year. You know, I'm one of the oldest, you know, trader on the market right now that's talking to you. I don't think you can find an older guy that's talking to you on chart. So a lot of you know, experience and a lot of losses that comes with it. So what I want to show you right here, all right, is all right, a very simple way of, okay, sorry about that. Okay, all right. So I want to show you a very simple way of, you know, just watching price action. So I want to blow up here. Okay, so here, I want to blow up here. And I want to show you something special happens here. All right. So what special happens here? Look at the volume blow up. All right, especially on this day, the day that Hang Seng bottom. Okay, so that was what I was showing to you on the HS chart. Also, a blow up. What it means is that everybody, every bull, right, has thrown in their towel, okay, and they are saying, I give up with Hang Seng, all right? And when every bull throws in their towel, although it is a bear market, it will still rebound. So in many rebounds, I've never trusted it, but this rebound, right, I'm going to trust on it a little longer. Okay, so this rebound, it's going to be another bear market rebound, but it's going to last, the rebound is going to last a little longer than most rebound. Why? Because most people has built out. Okay, all right, so this rebound, right, it's going to be similar. So you see a lot of risk rebounds here. All right, a lot of risk rebound, like, you know, you see there's a huge volume here. The market rebounded and lasted for like 1 month. All right, here 1 month, you know, and every time we have a huge volume, it lasts for 1 to 2 months. Okay, so we just had a rebound here. All right, on high volume, which means, right, that this bottom here is going to stay for the next 1 to 2 months. Okay, which means, right, this time round, we are going to have a good trading opportunity where the market, you know that the market has hit the bottom for now. All right, so that is what the chart is telling you. The market has hit the bottom for now, for the next 1 to 2 months. And therefore, if you can buy on dips, all right, and you can buy on the low, there is a good chance that you can make money because the market is not going to crash through the bottom anytime soon. Okay, so what I think, all right, the market is going to do in the short term is this. All right, because the price action here, look at here, all right, can you see my cursor here? The price action here and the price action here is somewhat similar because we have people throwing in the towel. So in the price action here, right, the market actually went up, rebounded 20% from the low. So here we only have the market like rebounding like maybe about 10 to 15. So not yet, right? So I think, the market has still got some way to go. So the question is, how far can it rebound? All right. So how far can it rebound? The most optimistic case, all right, it's here. All right, so let me try to get up my charts here. So let me see, right? Okay. Sorry, I just missed my trend line. All right, here. All right, so the most optimistic case is this here. All right, you see these 3 points here. All right, then I join together, becomes a trend. And here, all right, I join together, we caught the bottom here. And the most optimistic case is that the market could rebound to about 1900 from 1600. That is the most optimistic. But, it may not be that optimistic. All right. If it's not that optimistic, this is where it's going to go. All right. It's going to bounce to about 17,500. Okay. So I hope you got the two figures in your mind. All right. And so what is the trading strategy for Hang Seng now? It is to buy on dips. You buy on dips, you're going to make money. All right. Because the bottom has been formed for now. All right. So your risk is breaking the last bottom, which I don't think is going to break. All right. But, the Hang Seng is going to swing up and down, and therefore buying on dips now becomes the right strategy. Okay. So I hope you have got the short-term picture correct. I hope you learned something from my live demo. All right. Okay. So let me go back to the slides. So are you guys following me? Okay. I hope you're enjoying the session tonight. The last thing I want to see is some people falling asleep on my seminar. Okay, so let's press on. Okay, today, right, I've just completed Hang Seng. Okay, so I hope you can use this information to trade the DLC and make plenty of money for yourself. Okay, so like I said, right, by the end of the session, I don't want you to go back thinking that, the market is, you are beholden by the market. You should have positive control, all right, of what, you are doing and have some good idea of where the market is heading. Okay, so I predicted the 3 crashes, and you guys know that Wall Street has been on the bull run for many, many years, since 2008, all right? It was on a bull market, Wall Street. And to predict crashes in a bull market is like trying to find a needle in a haystack, all right? So I predicted the 2007, 2008 bear market, all right? So that is the global financial crisis bear market. And so this was the bear market that, made me a couple of $1 million. And, I'm always very thankful to this bear market. Okay, so this is how I predicted the bear market. Okay, and very simple. We have a trade plan like this. All right, so this one is not so complicated. All right, so it was like two trend lines, and you find the top right here. All right, and that's how I turned $100,000 shorting the market. All right, in 2008. All right, and by the end of the short, I made over $1 million, and that is my day-to-day account. And very quickly, the second crash was the pandemic crash. And very early in the pandemic, all right, even before the pandemic came, 4th of February, I've already warned, all right, all my followers, my students, get out of stocks on 4th February, all right? I said, get out of stock, it has peaked, all right, and it crashed. Okay, so that is the pandemic crash. The market dropped between 30 to 35%, right, within a month, right? And that comes with a trade plan also. And you could see this was my trade plan for the Dow Jones. And that was where in February I called a short and the market fell. Okay, so that was a trade plan. And so this one, it happens too quick and therefore only made a couple of $100,000, didn't make the millions. All right. And so this is the third crash that I predicted. And I call it the global inflation crisis, all right, for a better word. And you could see that I, like the previous crashes, I always call it a month or two before it happens. So here I called the market peak in November. The crash only came somewhere off in January 2022. So in November 2021, I've already called that the market has peaked, and true enough, the market peaked, just it hasn't crashed, right? So that was where the market peaked, and that's where I started shorting the market, all right? And so this is my trade plan for S&P, all right? So that was my grand macro trade plan on S&P and Dow Jones, and this is the detailed trade plan on S&P, how it would hit the top and how the whole trade plan will play out. And obviously, when you look at this trade plan, S&P will not, all right, bottom out until it hits about 3,000 level according to this trade plan. Okay, so now it is quite still far away from the 3,000, approaching there, but still far away, and therefore it has not bottomed. All right, so now I want to very quickly, right, in like 5 minutes, show you how I predicted the Nasdaq top. All right, so predicting the top is not good enough. All right, you must be able to predict where it falls, where it rebounds, and even the rebound. All right, in the market, so important to be predicting the intermediate bottom, intermediate rebound, because rebound can kill you, all right? So a lot of times the market like now, all right, you're seeing the Dow Jones rebounding almost 60% from the low, okay? So, and a lot of these rebounds can be very, very fierce. So you need to know where the market, bottom and top, and the rebounds, all right, where they come. Okay, so this is Nasdaq, and on 21st November, I called the top, and after I called the top, I said, all right, the Nasdaq is going to, and the top was at 16,764, and I said, my next target for Nasdaq, all right, a lot of people don't believe it, it's about 1,500 points down, next target is 15,250, did that happen? All right, I don't have time to go through these details, but look at that, all right? So November, I talk about it. January, it was still there, all right? Although it hits the peak in November, it was still swinging. And I was asking all my followers, stay with me, his crash is coming, stay with me, all right? So, all right. So on 18 January, finally, I said, the crash is coming in a very short time, days, or maybe weeks. All right, and I said in 18 January, it's coming 10 to 20% crash coming, All right, and that's what happens. Look at that. All right, the crash finally happened. 21st January, it broke, and my 15225 mark. All right, and I said after it hits 15225 mark, right, the next level is going to hit 14,000. All right, so did it hit 14,000? Sure enough, it hit 14,000. You look at this trade plan. All right, it went all the way to 14,000. For 14,000, right, it rebounded all the way back to 15,000 again. Right, so I said, short it right here, 14,000 buyback, 14,000, wait for a rebound, 15,000, short it back again, and that's what happened. 15,000 roundabout 100, short the market. All right, see here, I talk about 15,300. Approaching my target. When it hits 15,300, short the market, and after 15,300, right, it's going all the way right to my target at 10,920. All right, so that was where it was going, and true enough, all right, you could see that the market headed all the way there. All right, so this was where the rebound came, and I said, you know, it's going to visit the June low, and true enough, it visited the June low. And this is something that I'm going to show you, right? So this is my macro trade plan, all right? But then what I want to show you about NASDAQ, all right? So I want you to be ready for this, all right? It's like, you know, it's something that is, you know, it's going to, you know, it's mind-boggling, but, you know, in one slide, right, I'm going to show you how and when, all right, NASDAQ is going to crash and what levels, okay? So this is a chart fresh out of the oven. I just drew it for you, all right, tonight, that tuned in. Okay, so this is what's going to happen. So I predicted the top. And I want you to believe me that the bottom that I predicted is going to come. So you could hear a lot of whispers today that the market has bottomed, right? And the market is showing it. It is bottoming. You have Dow Jones rallying like 7 days in a row. You have NASDAQ, you know, rebounding. Okay, but what I want to show you right here is that you have to believe in your trade plan. And this is my macro trade plan that never changed. All right. So this is what I drew just today. And this was like the last couple of months. You know, my target for NASDAQ at 18,800. All right. It's never changed. All right. Up to today, it's never changed. But now I want to explain to you how I get it. All right. So this is that macro trend. I call it the RHO cycle. All right. RHO is my name, Robin Ho. All right. So this is the RHO cycle. And the RHO cycle has predicted 3 macro trends that we will see, all right, before we see the next macro trend, which I don't know what, all right? So the next macro trend, I don't know, but I know we are in the 3rd macro trend, right? So what is the first macro trend? So this is the first macro trend that stretches all the way from I would say, 2008, 2009, the great financial crisis. All right, but the trend really started here. You could see a very discerning trend from 2016 all the way to year 2020. All right, and that ended with the pandemic crash. So this is the pandemic crash. All right, so that was one crash, and that was a 2018 crash. Okay, and you know, and the market has finished right this first macro trend, and then it went on the next parabolic trend, all right, which happens to peak in the beginning of November last year, okay, and that was the second macro trend, which I predicted very in precision, all right, according to my trade plan, okay, and then I predicted the 3rd macro trend that is going to happen. And so this is now the 3rd macro trend. And if you are wondering why the market has bottomed in June, okay, this macro trend spotted right there, right? Spot on. Look at that, right? So look at this blue line. As the market falls, it hits the blue line, rebounded. It came back and hit the blue line again and is rebounding. All right. And so this is updated up to today. So you must watch this line. So I expect this bottom to be here for a couple of weeks. All right. And after the rebound, as the arrow shows you, it's going to break. So the next break is going to be a meltdown. So you have to be careful about the next break. All right. So the next break is going to take NASDAQ from 10,009, about 11,000, that what we are having here, to 8,008, and that's where you can now start dollar cost averaging to look for the bottom. All right. So that's where we're going to have a super big rebound. All right. Even if it's not bottom, we're going to have super big rebound, 8,008. Right. So a lot of people will ask, is there a possibility that NASDAQ will bottom, multi-year bottom from here? From my chart pattern analysis, 30 years of charting, long-term charting, short-term charting, price action, I watched them all in the last 30 years. And in this kind of price action, there is a 70 to 80% chance that it will break. All right. And 18,008. So I hope, all right, you could now see the whole big picture. All right. Trade the micros, yes, but understand the big picture, because the big picture gives you conviction. When the market is right at the top, the short DLC was, NASDAQ DLC was only about 20 to 30 cents. When it hit the bottom here, it was about 110 to 120. All right, about 110 to 120, I'm not mistaken. All right. So I'm still holding that DLC short. All right. And I hope, right, but when it hits 1800, it will be about $2 to $3. All right. From 20 cents to $2 to $3. All right. So this is, where my conviction is. All right. And this is what I want to share with you. All right. And I want to share with you how you will use DLC to trade a market like this. All right. So this is a very simple trade plan that I share on my chat group. I share with my followers, my students. And this trade plan called for NASDAQ, all right, to break the 12,033 to go all the way to 11,358. All right. So that was the trade plan. Okay. To call for a short. And in this trade plan, that happens exactly, all right, we bought the DLC, the NASDAQ DLC at 525, all right, and it went to as high as 1.10, all right, so and you could see that very short time, all right, within like two weeks, all right, we double our money, all right, so this is what, if you understand trend, you know how to trade the market, this is what the DLC can do for you. It can double your money. But if you don't know how to do it, all right, it's a double-edged sword, right? If you don't know how to do it, the risk is that you can lose all your money too, right? So that is why, right, if you're trading DLC, if you're new, you need to start by following somebody. If you want to follow me, you can follow me on my Telegram chat group, all right? But if you are new, you cannot, it's risky to be doing it on your own, all right? You need to understand, you need to learn, all right, before you can do DLC. And this is one of my very simple trade, contra trade that I bought the NASDAQ short DLC on 13, I sold it on 16, and I made contra gain $4,500 Singapore dollar. All right, so I hope I have given you a good idea. Okay, so now this seminar is all about trading in tough times. Very quickly, let's go through it. All right. Why are we in tough time? And why is it that I believe that this bear market, all right, will last a lot longer than most bear market? All right. So most bear market lasts between 3 to 5 months. All right. And this market a mega bear market can last between 1 to 3 years. So I think this bear market will last to be around that region. Okay, I hope not too long, but I believe it's going to last about that long. All right, so don't be too eager, all right, to go into long-term investment yet. All right, and one of those red flags, right, that you see is that a lot of things are not working in the market. A lot of traditional medicine or traditional investment, all right, strategy is not working, like the 60-40 stocks and bonds, all right. So for many years, when stock market crashed, a lot of people moved to bonds, all right. The shift from stocks to bonds. But today, this what we call balanced portfolio is not working. Both are crashing, all right. Stocks and bonds are all crashing, and this is something unprecedented, okay. And I'll tell you why it's unprecedented. Look at this. Look at this 60-40 portfolio, all right. It is the worst since the Great Depression. And that is why I believe, all right, that there's a lot of damage, collateral damage that's already done to the market. And the can of worms is just waiting to come out. All right. A financial accident is lurking somewhere. All right. We haven't seen it yet, but it's coming. Okay. So look at this chart, this presentation here. All right. 5 of the worst years for US stocks, all right, for the last 100 years is now. All right. So if you take at a face value, nominal value, the Great Depression was the worst. All right. After the Great Depression, this is the 3rd worst, all right, 60-40 bond portfolio, downturn. All right. If you adjust it for inflation, this is the historical worst for this, which means, right, the bond market is a lot more bigger than the stock market, which means a lot of investors are losing huge money. All right. Okay. So why is it tough time? Because the dollar is surging, and when the dollar surges, a lot of global companies, all right, that trades in US dollar is hurting. And a lot of people who borrow debts, all right, major institutions borrow in US dollars, and they are hurting. And therefore, this is something also quite unprecedented. Have you seen the Singapore for many years, all right? Since, I was like, started trader in the market, we have Singapore bonds, saving bonds crossing a 4% mark, and now we're seeing it, right? 4%. A lot of you, would buy in REITs or some sort of, some sort of bonds just to get 4% a year. But today we get risk-free 4% a year, all right? And that is, to me, detrimental to the market. All right, so you see the 2-year treasury yields, risk-free, also hitting 4%, 10-year also hitting 4%. And what I want to show you here is also another chart, all right, that is alarming, right? Alarming, what is this chart? This is the inverted yield curve chart, right? And in this inverted yield curve chart, right, it has reached a level, all right, of the major crisis or major stock market crisis in history. All right. So this inverted yield curve has hit that kind of threshold, but the stock market has not hit, all right, that kind of bottom yet. All right, which means the bottom is not yet. All right. So in the bear market, gold still supposed to be working, but it's not. Gold has dropped 21%. All right, in 163 days, all right, a lot of people were thinking that the Bitcoins, all right, will be the one to able to hedge the market in prices. Bitcoins fell in tandem, and just yesterday, a lot of people were thinking that Bitcoin is going to move along the market, but it did not. It crashed, all right, from 21,000 to 19. All right, just yesterday, today it crashed to 19,500. And that is why, I've never been bullish about Bitcoins, all right? And, I didn't believe that, it is the modern day sort of, investment safe haven, all right? And the tech stocks, which was a darling, all right, since 2008 is crashing, all right? In the high interest rate environment, all right, high inflation, these are the ones that get hit more. You can see Microsoft, never see a stock, Microsoft, such big heavyweights, right, down 8% after the profit warning. Meta was down 24%, right? Facebook, Amazon down 11%. So this, all right, so a lot of people, right, in the bull market days, all right, a lot of your financial advisor, a lot of, people who believe in the Warren Buffett strategy, believe in dollar cost averaging. So if you have dollar cost average on a blue chip like Alibaba, you would have been dead, all right, by now. Okay, so because Alibaba has dropped from the peak, right, 80%, can you imagine, you just kept dollar cost averaging, you would have gone bust. So dollar cost averaging, right, is, it works well in a very trendy uptrend, a very good uptrend market. But when the market comes down, right, one of these dollar cost averaging adventure of yours is going to go wrong, and it's going to cost you your lifetime savings. Okay, so how to survive? All right, this is what a seminar is all about. How to survive in this bear market. You must understand, between the you must know, right, between the weak, the strong, and the weak. For example, right, when investors are fleeing the growth stock, the tech stocks, although the value stocks like the Dow Jones, the banks, right, they were going up. But, they were relatively stronger, right, than the techs. Okay, so you need to know the strong and the weak, right? You need to understand where the real support resistance is. So a lot of us know about support resistance, but we don't know how to plot the real support resistance. We need to understand price volume analysis. We need to understand trend. We need to be comfortable with shorting. How to survive in the market. You must, do away with the old, very traditional mindset thinking that the only way to make the money from the stock market is to buy. All right? No. You have to do the reverse. You must be able to do the reverse. Okay? And to do that, right, today we have DLC to facilitate us. The long DLC, you can buy it on the rebound like now, all right? So now I don't favor you buying the short Hang Seng DLC. I buy on dips, Hang Seng DLC long, all right? When Hang Seng dips, buy the long DLC. So now short is out of fashion for Hang Seng, all right? So you need to know when to enter and when to exit. And this chart here tells you, the rebasing chart will tell you relatively, if you have to buy an index, buy Dow Jones. If you have to short an index, short the Nasdaq or the HS tech, because they are the weakest. So don't touch the techs, all right? Don't touch the techs, all right? And you could see that the money is all in the West. Although the East is crashing, the China stocks are all crashing, but the Dow Jones, has gone down, but it has also rebounded, right, in a very unprecedented way. Fierce rebounds. You can be dead both ways. That is why you need to understand price action. You need to have a trade plan. Okay, so I will not go through all this. I don't have time. My time is up. Let me just very quickly go through. All right. Okay, so I just want to go through with you. I think a lot of you are here to listen to stock picks, right? So I want to tell you my stock picks. So I have been, all right, so this is not the first time I'm talking about this. All right, CSPC Pharma. All right, there is a DLC on CSPC Pharma. Right, I believe in this stock because I read this report, CSA report somewhere, and I believe in it because this CSA report, right, after it was written, when I look at price action, it seems that the price action seems to be telling me that something is brewing. Okay, so this CSE, right, says that. Report, right, says that the CSPC Pharma, all right, is in the process of, developing one of the best or the best in the world COVID vaccine, all right? And read what this analyst said, right? He said, if and when the tide turns, all right, for the China COVID policy, and this is what we're witnessing now, right? The tide is turning, all right, the COVID policy, all right? CSPC Pharma may be the central to it. This analyst Charles said that is developing one of the best mRNA vaccine in the world. All right, and he has ramped up his price target to 120% gain. All right. And, you know, and this guy here catches on the US and he said that this is one of the most bullish things I've heard for China. Right? If this is correct, CSPC gets the emergency approval in November. We are in November. Are we going to get emergency approval in November? And then they start putting in the domestic mRNA, all right, into people's arm. This is not just bullish for CSPC, it is bullish for China and bullish for travel stocks, copper, consumer, and everything else. Okay, and that is why I have been, you know, monitoring the price action of CSPC. And let me tell you why. Okay, look at that. You know, in September, right, here, in the middle of September, CSPC started climbing. But when you look at the charts of Hang Seng, it's still falling. A lot of Hang Seng stocks is falling, but the CSPC is going against contrarian divergence, is going against the grain. And therefore, I believe something is coming up in this stock. Maybe what the analysts predict may be coming true, right? I'm not sure. But for me, I just watch price action, right? If the price action is weak, you know, I won't believe it. But the price action seems to be telling me something is happening, all right? And the best part now, we have a DLC, all right, that you can buy for CSPC. So what CSPC, it just hit, all right, my target $10. And after that is pulling back. So I'm just waiting for it to pull back a little lower. And, you know, I hope that you break $10 and go to my next target at $12. Okay. So if you have like 30% gain or 20% gain from CSPC, if you buy the 5 times short, all right, you can make close to 100% gain. All right. So this is the new long CSPC 5 times long SG 20, all right, 231102 long CSPC DLC. You can make use of it if you're bullish on it. So the next thing I'm bullish about, all right, is this crude oil chart, all right? So the crude oil, you can see the uptrend was like briefly breached and it tried to, you know, break out. And so, you know, just a couple of days back, it broke above. Okay, so I think, right, for my chart, it seems that crude oil may reattempt to go for the $100 mark again. Okay, so crude oil may be going towards the $100 mark again. The chart is looking bullish. All right, and therefore, if you are bullish on crude, okay, you may want to be looking at the, you know, let me see, yeah, CNNOC. All right, so this is a CNNOC. It's an oil stock, all right, on China. Right, and this is the DLC. You may want to look at PetroChina. Okay, and the other thing that I want you to be watching is that, you know, the Bloomberg Commodity Index is also turning up. Look at the three bottoms, all right, that is holding up the Bloomberg Commodity Index, and therefore commodity is heading up, all right, and look at the commodity stocks, oil stocks, they are good, all right. So let me just go ahead. All right, so my time is up. I'm taking too much time, and I will skip all that. I'll quickly go to tell you. Okay, so if you are tonight, you're here tonight, and you believe what I say, and you believe that you know, we can, you know, be in control of things. We can make money from the market. We can know where the market is topping out, bottoming out. You know, and you know. And we can make a lot of money, all right, if we have the right trade plan. All right, visit Robinhood trading community. Join my trading community. All right, if you're here, if you have never joined a trading community, please join. Don't trade alone. Okay, so just go to my blog. All right, click join Robinhood. All right, trading community, and you are able to join my trading community. All right, if you want, all right, to be able to do what I'm able to do, make money from the market, from trends, from price action, go to my website, all right, and click on courses. I have a courses coming up, all right, just about another 1-2 weeks time, all right. If you want, quickly join, all right, we have limited space. So this is the course that I'm doing, price action course starting on 21st. All right, so another 10 days. All right, it is starting a 3 weeks course. Okay, 3 weeks course. I will run through a portfolio with you. All right, 3 weeks. Why so long? Because I run through a portfolio with you. All right, and we see how the portfolio grow from the time we attend the course to the time the course ends. And I am with Phillips. Okay, and you can, if you want to talk to me, just scan the QR code, and you can join my Facebook, RHO Trading Community. Facebook is free. Join it, all right? And you can get a lot of my calls, fee analysis on my Facebook. And the most exciting thing of all right, is the DLC Telegram chat group. Today, I have one of my DLC Telegram chat group followers, and he thanked me, all right? He said, Robin, I have been through a lot of follow trades, all right? Apps. A lot of these follow trade apps, right? You can follow a lot of gurus for fees, and a lot of them are like 300 US a month, and you pay the whole year maybe $2,000 to $3,000 US. And boy, this is a follow trade. You can follow my trade, you can follow my calls, you can follow my analysis, my insight for free. All right. And all you need to do is to scan on the QR code, all right? And you can be following my trades for free, okay? And if you have anything, all right, to note, okay, please call me on my office phone. I have my partners, Yun and Juren. You can email them if you have any queries about trading DLC or anything we do with trading. Okay, so I'm done with my session. We can do a little bit of Q&A here. Let me just hand it back to Marcus or Justin. Are you there? Let me see if there's anything on the Q&A.
Hey, yeah, I think we managed to answer a few of the questions.
Okay.
Yeah, so I think it should be okay. I think you had a very extensive session. Well done.
Okay.
Thanks, Robin.
So we're done. Thank you, everyone, for signing up. Good luck.
Thanks, everyone. Good evening.
Okay.
Bye-bye.
Bye-bye.